You remember everything that happened in Japan and the tsunami, but not a lot of people remember all of the business interruption, the contingent BI losses that came as a result of that. Well, then again, we finished the year with Thailand. Very similar results. I think that no one really knew how much exposure they had there, how much of it was concentrated, and what would be the business interruption from such large flooding losses. So I would say, Meg, the best and most important is the world is getting riskier. The models that we use, we have to carefully examine and make sure they're adequate to cover the new world order of exposure. And what that means for our clients is increased sales, increased exposure bases, revenue, more cars driven, more payroll, et cetera. We're also seeing some parts of the world, particularly in Europe, where we're seeing flattening or decreasing parts of the economy. And even in Asia Pacific, where we see a great deal of manufacturing beginning, it all hasn't started to ship yet. So we're still seeing shipping down. So it has both positive and negative effects. Overall, I'm optimistic it's going to be improving over the next couple of years. Not a hard market in the sense that we're not seeing the same drastic spikes that we've seen before. But it is firming, it's moving in the right direction, and it needs to firm, it needs to continue. Now, I believe that it's very possible it could easily slip into a hard market if there is a major catastrophe, something that at the end of the day would have the kind of impact that either Japan or Thailand had last year. Till then, it's firming, and I hope it continues in that direction because it's absolutely necessary.